It's the worst kept secret ever. China last week revealed itself to be the mystery gold buyer that has had Twitter all over Twitter for weeks. That's right, for the first time in 3 years, China released its official gold holdings and confirmed that they have upped their reserves to 1,980 tonnes. But how much gold did they really buy, and why are they, along with other central banks, stocking up at a record-making pace? Listen up as we bring you the true China gold numbers and the reason why the top 5 gold buyers are freeing themselves from the dollar and stocking up on gold. Hi, I'm Dave Russell and welcome to GoldCore TV, helping you make sense of the precious metals markets so you can make better investment decisions. So, after months of speculation, we now officially know that China has been adding to their gold reserves. Last week, the PBOC confirmed that they had bought 32 tonnes of gold. This was the first time since 2019 that they provided any information about how much gold that they own. Now, what does this amount of gold actually mean? So, assuming they bought good delivery bars of 400 ounces each, then this means that they had to make space for 2,260 bars. And how much space is that? Well, the total meters cubed of this is approximately 3 meters. And how much have they had to fork out for that? Well, if we assume that the value of about $1,800 an ounce, then they've just had to sign off on over $1.6 billion of gold. Now, these numbers might sound big, but in the greater scheme of things, this isn't going to move the gold market. The total value of all the gold in the world is approximately $11.8 trillion. So in percentage terms, the PBOC have only bought 0.0137% of gold in October of this year. Far more than you and I were ever likely to buy, but small fry all the same. So, should we care? Well, yes, because things still don't quite add up. In quarter 3 of this year, central banks bought a record of nearly 400 tonnes of gold, or 399.3 tonnes to be exact. Now, from official records, we know that Turkey, Uzbekistan and India bought about 31.2 tonnes, 26.1 tonnes and 17.5 tonnes respectively. And you don't have to be quick at mental arithmetic to know that these 3 bank purchases do not add up to nearly 400 tonnes. So what happened to the other 300 tonnes? It's very possible that China bought those as well. So why not include those in last week's announcements? Well, it would be very true to form for China to gradually release how much it has been buying. This is exactly what they did between 2015 and 2019, and we wouldn't be surprised if this was what we'd see now over the coming months, if not years. In 2015, after 6 years of silence, they announced a 600-ton leap in their reserves. It seems very strange for a country in China's position to have only acquired 32 tonnes of gold since its last official announcement in 2019. After all, they are known to have been importing gold from Russia and have a major history when it comes to modernising their gold market and reiterating the importance of owning gold. I suspect we've a lot more to hear from China and their gold reserves. But what are their motives and the motives of the top 5 countries who are buying? Now, central bank buying doesn't usually spur the gold price to move significantly, and if it does, it's often short-lived. But it does something better. It provides support for the gold price, as it's an important indicator of how those who run the global economy feel about the state of things to come. So worried are central banks about the state of play that this year has been one of many records when it comes to gold purchases. This year's year-to-date total far exceeds any seen since records began in 1967. 1967, when there was still a gold standard. Why are these central banks stocking up on gold? Well, never mind China. The year's biggest gold buyers were Turkey, Egypt, Uzbekistan, Iraq and India. Turkey, over 100 tonnes. Egypt, over 40 tonnes. Iraq, India and Uzbekistan, each nearly 40 tonnes of gold. This is very much an ongoing trend. We fully expect to see this continuing diversification by central banks into gold purchases to hedge against ever-growing risks. One of the biggest risks, these countries believe, is the US dollar strength and the hegemony. Countries are fed up with the liabilities that come with the US dollar. One simple reason for holding gold rather than US dollars or other currencies is because it just makes investment sense. At the moment, the world is on tenterhooks whenever there is an announcement by the Federal Reserve. The world, that is. Except gold. Check out this chart from Bloomberg. It shows that gold is the least sensitive to the Fed moves. whereas stocks are more than twice as sensitive and non-dollar G10 currency 1.5 times more sensitive than gold. It sounds too risky to not hold gold in today's environment. Consider India. This last year, the Indian rupee has experienced a near 10% fall against the US dollar. This is primarily due to aggressive rate hikes by the Federal Reserve. Therefore, the RBI's gold buying spree of nearly 40 tons could be an attempt to diversify assets in which its foreign exchange reserves are parked. By adding gold to the reserves, the fall can be cushioned somewhat. And as if Fed decisions weren't pressure enough, what about the brute force this last year that the international system has carried out? Through the power of the dollar. No matter what you think about the war between Russia and Ukraine, the damage carried out through sanctions has a lot of central banks realizing it's too risky to have so much exposure to the global reserve currency. As Bloomberg analyst David Finkling wrote, bullion does have one crucial advantage. Unlike bonds, it doesn't bind you into a relationship with an unreliable counterparty. In February, coordinated sanctions on Russia's central bank vaporized most of the $498 billion in reserves sitting on its balance sheet. In a world where you can trust no one, it makes sense to bulletproof yourself with metal. As the Nikkei Asia explained, Chinese imports of gold from Russia surged in July, soaring more than 8-fold on the month and roughly 50 times the year earlier level, according to China's customs authorities. As deglobalization increases, non-Western countries need an alternative to the US dollar. It seems that rather than turning to another fiat or digital option, they're commoditizing their reserves with gold. Since 2010, central banks have been massively increasing their reserves, and this is nothing more than good sense based on historical experiences. Central banks have long possessed significant gold stockpiles in the past to protect their financial infrastructure. The gold supply gives a financial system the means to recover in the event of a collapse. So trusted is the yellow metal that the presence of gold in a central bank's vaults fosters trust for the strength of the nation's financial system and its governance. And let's not forget rampant inflation. This might be one of the most significant reasons for not only central banks but anyone to own gold. Right now, there's nothing that inflation doesn't seem to have touched. And if you want to see how this in turn has affected the gold price, then check out these ratios. Whether it's oil, currencies, wheat, housing, or equities, you have got to take a look at what these ratios are suggesting for 2023. Head over to our chat on gold ratios and our expectations for 2023 now.